The Iraqi Dinar Revaluation. Hype, hope, and hard numbers. Welcome to Iraqi Dinar RV. Few currencies in the world stir as much debate and speculation as the Iraqi Dinar, IQD. From forums to finance channels, the buzz around a possible revaluation, RV, continues to attract hopeful investors and cautious skeptics alike. But beyond the noise, what would a dinar revaluation actually look like? How much could your holdings be worth in US dollars? And how much would you actually keep after fees, taxes, and logistics? Let's dive into the core truths behind the dinar RV, examine real-world scenarios, and uncover the financial realities that every IQD holder should prepare for. A brief history of the dinar. To understand the revaluation conversation, it's essential to first look at the dinar's history. Before the 1990s, the Iraqi dinar held strong against the US dollar, at times trading above $3 USD per 1 IQD. However, years of war, international sanctions, regime changes, and economic instability led to a dramatic collapse in its value. As of now, the official exchange rate floats between 300 and 1,500 dinars per 1 US dollar, although black market rates may differ slightly. This discrepancy fuels the speculation that one day Iraq may repeg or significantly increase the value of its currency. Why do people believe in a dinar revaluation? Supporters of the revaluation theory often point to Iraq's immense natural resources, especially oil, as well as its strategic geopolitical position and long-term potential for economic growth. Proponents argue that if Iraq stabilizes its political landscape and builds modern financial systems, the country could re-enter the global economy in a meaningful way. This would potentially include a currency reform or revaluation of the dinar. Institutions like the International Monetary Fund, IMF, and World Bank have also engaged with Iraq on economic reform, which fuels optimism that the groundwork for a revaluation could be in motion. What is a currency revaluation? A currency revaluation is when a country's central bank officially increases the value of its currency in relation to foreign currencies. Unlike market-driven appreciation, revaluation is an intentional move, typically tied to economic reform, exchange rate policy changes, or reserve strength. In this case, it would mean the Central Bank of Iraq, CBI, deciding to raise the value of the IQD against the USD, for example moving from 1,300 IQD per $1 to something much stronger, such as 1 IQD equals $1. Revaluation scenarios. What could your dinar be worth? Let's explore 3 commonly discussed revaluation scenarios and their implications. Scenario 1. Conservative revaluation. IQD equals 0.10 USD. If the dinar were to revalue to just 10 cents per unit, then someone holding 1 million IQD would end up with 100,000 USD. While far below the dreams of some investors, this would still represent a significant return, especially for those who bought in at a low price. Scenario 2. Moderate revaluation. IQD equals $1 USD. In this more optimistic case, each dinar would equal 1 US dollar. At this rate, 1 million dinars would be worth $1 million. This scenario is the dream target for many, but it would require a huge leap in Iraq's economic infrastructure, foreign reserves, and confidence from global financial institutions. Scenario 3. Historical parity, IQD, equals 3.22 USD. This is the most aggressive projection and matches pre-Gulf War values. Under this outcome, 1 million dinars would be worth a staggering $3.22 million USD. However, such a dramatic shift would demand immense sustained growth and political stability, factors that remain uncertain. Realistically, if a revaluation occurs, Initial figures might fall somewhere between 0.1 and 0.50 cents per dinar, with gradual increases over time as Iraq's economy develops. The hidden costs, taxes, fees, and regulations. Even if the RV happens and you find yourself with a windfall, you won't walk away with the full value in cash. Here's what could reduce your return. 1. Exchange fees. Banks and currency dealers typically charge a spread, a difference between the buy and sell rates. These fees can shave 2% to 5% off your total exchange value. 2. Taxes. In the United States, profits made from foreign currency held for investment purposes are often subject to capital gains tax. This could range from 15% to 37%, depending on your income bracket, plus potential state taxes. Without proper tax planning, you might lose a significant chunk of your gains. 3. Documentation requirements. When the time comes to exchange, you may be asked to present proof of purchase, such as receipts or certificates of authenticity from licensed dealers. Failing to provide this documentation could delay or even prevent you from cashing in your IQD. Where and how to exchange your dinar. If the revaluation happens, exchanging your dinar securely and legally will be critical. Here are your primary options. 1. Local banks. Some U.S. banks may offer dinar exchange services post-RV. However, many banks avoid dealing in exotic currencies like the IQD. It's important to confirm in advance whether your bank will participate. 2. Licensed currency dealers. Reputable dealers, such as Safe Dinar, XC, or Trax, may assist with large-scale exchanges, provided they are registered and operating under post-RV guidelines set by Iraq's central bank. 3. International banks. Banks in the Middle East, especially those with ties to Iraqi institutions, may offer favorable rates and streamlined processes. Transferring your funds abroad, however, may come with legal, logistical, and tax considerations. Caution! Scams and fake dealers are common in the dinar space. Always verify licenses, business reviews, and customer protections before proceeding. Managing expectations. Hype versus reality. Thousands have already invested in the dinar, driven by stories of overnight millionaires and pre-war value recoveries. But emotional investment can be risky. The truth is, no one knows exactly if or when a revaluation will occur. And if it does, the pace could be gradual rather than instant. Patience and realism are critical. The most strategic investors will hold long enough to capture potential upward movement and prepare for delays and volatility. How to prepare now. If you own dinar or are considering investing, take these steps to prepare for any future developments. 1. Organize your records. Keep receipts, certificates, and any related documents in a safe, accessible place. 2. Stay informed. Monitor updates from the Central Bank of Iraq, CBI, and International Monetary Fund, IMF, not rumor sites. 3. Choose the right bank. Look into financial institutions that specialize in foreign currency and international transfers. 4. Consult a tax professional. Pre-RV tax planning can help you manage capital gains and minimize surprise tax liabilities. Final thoughts. The Iraqi dinar revaluation remains one of the most watched and controversial subjects in the currency world. While the dream of a $3 dinar may still be far off, even modest changes could lead to meaningful returns, if you're prepared. In the end, how much your dinar is worth depends on more than a central bank announcement. It comes down to preparation, documentation, strategy, and timing. Stay realistic, stay alert, and you'll be in a better position than most if the big day finally arrives. What do you think the revaluation rate will be? How are you preparing for it? Drop your thoughts in the comments. Let's start a real discussion. Disclaimer. This article is intended for educational purposes only and does not constitute financial, legal, or tax advice. The foreign exchange market is inherently risky and prone to misinformation. Consult with qualified professionals before making any investment decision. Iraqi Dinar RV is not liable for any losses or damages resulting from the use or reliance on this content.